Have you noticed how weird buying a house feels right now? I mean, just a few years ago, people were rushing to buy anything they could get their hands on. Prices were climbing so fast, it almost felt like if you didn't buy immediately, you'd be locked out forever. And now, you open property apps and something feels off. Prices look high, but buyers seem hesitant. Homes sit longer. Interest rates are higher. People are confused. So what actually changed? Did the market crash? Is it about to crash? Or is something deeper going on that most people are missing? Because the truth is, this isn't just about houses. It's about how people think about money when things stop feeling predictable. Most people look at the housing market like it's just numbers. Prices up, prices down, interest rates, supply, demand. And yeah, those things matter, but they don't explain the full picture because housing isn't just a financial decision. It's emotional. It's where you imagine your future, your family, stability, safety. And when emotions mix with money, people don't behave logically. Think about it. When prices were going up fast, people weren't buying because homes were cheap. They were buying because they were afraid of missing out, afraid of being left behind, afraid that this is the last chance. Now fast forward to today. Prices are still high, but that urgency is gone. And without urgency, something interesting happens. People start thinking again. Let's slow this down and actually look at what changed. A few years ago, borrowing money was cheap, very cheap. You could take a huge loan, and the monthly payment didn't feel that heavy. So even if the house price looked expensive, it felt manageable. That's the key word, felt. Now, interest rates have gone up. Same house, same price, but the monthly cost? Way higher. Suddenly, what once felt affordable doesn't anymore. And this is where most people misunderstand the situation. They think prices haven't dropped much, so the market is still strong. But that's not how real people experience it. People don't buy houses based on total price. They buy based on monthly pain. And right now, that pain has increased. So buyers pull back. Not because they don't want a home, but because the numbers don't feel safe anymore. At the same time, sellers are stuck in the past. They remember what their neighbor sold their house for 2 years ago. They remember the peak, so they hesitate to lower prices. Now you have this strange standoff. Buyers waiting, sellers waiting, and the market slows down, not because something exploded, but because both sides are mentally anchored to different realities. But there's another layer most people ignore: lifestyle pressure. Over the last few years, everything got more expensive. Food, fuel, rent, daily life. So even if someone technically can afford a house, mentally they feel tighter, less breathing room. And when people feel financially stretched, they avoid big commitments. Because buying a house isn't just a purchase, it's locking yourself into a future version of your life. And right now, that future feels uncertain for a lot of people. Here's the shift that changes how you see all of this. The housing market didn't suddenly become irrational. It just stopped being emotionally one-sided. Before, fear was pushing people into the market. Now, caution is pulling people out of it. That's it. Same people, same needs, same dreams, different emotions. And when emotions shift, behavior follows. This is why trying to time the market perfectly is almost impossible for most people. Because you're not just predicting prices, you're trying to predict how millions of people will feel about money at the same time, and that's unpredictable. But what you can control is how you respond to this environment. If you're thinking about buying a home right now, the question isn't, is this the perfect time? That question will keep you stuck forever. A better question is, does this decision still make sense if things don't go perfectly? If interest rates stay high for a while, are you okay? If prices don't rise quickly, are you still comfortable? If your income fluctuates, do you have breathing room? Because real financial stability isn't about catching the best moment. It's about surviving the uncertain ones. And if you're waiting, that's fine too. But be honest with yourself. Are you waiting for clarity? Or are you waiting for certainty? Because certainty rarely shows up. Markets don't ring a bell saying, this is the safest moment to act. They just slowly shift, while most people hesitate. And one more thing people don't talk about enough: renting versus buying isn't just a math problem. It's a lifestyle decision. Flexibility has value. Peace of mind has value. Not being tied down when things are uncertain That has value too. Sometimes the smartest financial move isn't the one that looks best on paper. It's the one that lets you sleep better at night. So when you look at the housing market and think, what the hell just happened? The answer isn't chaos. It's transition. We moved from a period of easy money and emotional urgency to a period of caution and reflection. And honestly, that's not a bad thing, because slower markets force better decisions. They give you time to think, to question, to choose instead of react. You don't need to rush. You don't need to panic. And you definitely don't need to get it perfect. You just need to make decisions that your future self can live with. Because in the end, buying a house isn't about beating the market. It's about building a life that actually feels stable inside it. And that takes patience, not perfect timing.